Hello friends, welcome to today's session. In today's session, we will be learning about receipts and payments account. We'll be learning what is receipt and payment account, its features and how to prepare receipt and payments account with the available information. Now, let us first understand what is an not-for-profit organization. Not-for-profit organization. From the name, you understand that this is an organization which is functioning. The intention is not to earn profit. So the motive here is not profit. And what is the motive? The motive here is to render service. Now, whom does it render service to? It might be rendering service either to its members, or it might be also rendering to public at large. Now, to understand NPO, we need to understand what type of organization you can find under this type of organization. You find charitable hospitals, sports club, which are formed in the form of a not-for-profit organization, where their intention is not to earn profit but to render service. Like charitable hospitals might be open to public at large. When sports club, people take membership in sports club and avail the services offered by the sports club. So there, the sports club is rendering service to its members. It might also be open to the public at large who can come and avail the services that they provide. Now, these not-for-profit organization, the financial statements that they prepare are a little different from those which seek profit. So the financial statements that are prepared by the not-for-profit organization include first, the receipts and payments account, which we'll be learning in detail in today's session. And from the receipt and payment account, it would be preparing income and expenditure account, which will help in ascertaining the surplus or deficit and the balance sheet of the not-for-profit organization as at the end of the year. So, moving forward, we'll learn today about receipts and payments account. Now, to understand receipt and payment account, first let us look at the format and the items which comprises the receipt and payment account, which we use to prepare receipt and payment account. Now you find that receipt and payment account, it's an account. So we have a debit side and a credit side. The debit side is the receipt side and the credit side is the payment side. So all the receipts, whatever is being received during the year, comes on the debit side of the receipt and payment account, and whatever is paid by the organization comes on the credit side of the receipt and payment account. Now, it always starts with the opening balance. The opening balance is of cash in hand, and if it has a bank account, then cash at bank opening balance would be written. So, receipt and payment account starts with an opening balance and ends with a closing balance of cash in hand and cash at bank. Thereafter, you find that there are several receipts. All the receipts, whatever amount has been received during the year, comes on the receipt side. So, like you have different sources of income for the NPO. For its operation, it requires funds. It raises funds in different manner. Like it might collect subscription from its members. So subscription is one of the source of fund for its operation. General donations. Donations is accepted by such not-for-profit organizations. Those donations are of two types, general and specific, but that doesn't matter when it comes to receipt and payment account. Whatever is received, it comes on the receipt side. You'll categorize it as general donations, specific donations, because the treatment of these two is different. When you are going to be learning the preparation of income and expenditure account, there you will learn that how they are treated differently. Then there might be grants received. from, say, government gives grants for specific purposes. There might be some certain grants given without any specific purpose. So those are called as general grants. So both are received by the NPO or the not-for-profit organization. So they are put on the receipt side. Other than that, some money might be invested outside, and out of that investment, some interest income might arise or dividend might be received when the investment is made in the shares of some company. Then those income, whatever is being received during the year, comes on the receipt side. Life membership fee is another receipt. When a person takes membership of a not-for-profit organization like a sports club, he might be required to pay life membership fee, which is going to be paid once when he takes admission into that club. So that is life membership fee. And on yearly basis or monthly basis, the member might be required to pay subscription. Thereafter, there might be certain receipts for specific fund, like people might donate saying that they want to contribute to a specific fund, like a match fund to organize a match when it's a sports club. Money might be collected for the purpose of conducting matches. So that's a receipt for match fund. Prize fund, if it is an education institution, prize might be installed for the top performers. So the money might be received towards setting up of a separate fund called prize fund. So those receipts also come on the receipt side. Sometimes the fixed assets which are held by the not-for-profit organization might be sold, and whatever amount is received, that appears on the receipt side. Also, you might find the closing balance here of bank overdraft. In case the bank balance is overdraft balance, then the closing balance comes on the debit side of the receipt and payment account. So this is the closing balance. So these are the several items that you can find on the receipt side of your receipt and payment account. So from this, you observe that whatever has been received during the year, that comes on the receipt side. Here we are not making any distinction here. We see that when it is subscription, you have received amounts, certain amount will be related to previous year which the member had not paid in the previous year is paid now. So it has been received this year. The members have paid for the current year, and some of the members might have paid for next year in advance in the current year. So all these have been received during the year. So those all amounts will come into the receipt and payment account because it has been received during the year. So here there is no separation as to whether it's related to current year, previous year, next year. What has been received is getting recorded. Now going to the payment side. Payment side, whatever has been paid would come into the payment side or the credit side of the receipt and payment account. So the opening balance of the bank balance, if it is a bank overdraft, would come on the credit side. If it is a normal balance, then it comes on the debit side, here on the receipt side. If it is overdraft balance, it comes on the credit side. Then you would have several expenditures of the not-for-profit organization, like it might have certain employees, so salaries have to be paid to them. Rent might have to be paid for those properties which have been taken on rent for the purpose of carrying on operations. Advertisement is another expenditure which to advertise its activities, some expenditure might be incurred. Repairs of whatever asset it has. Insurance which is paid by it. Honorarium which is paid to those people, experts who come and conduct some workshops or some camps in case of charitable hospitals. Specialists come in, say once a month, and they are available on that particular day at very reasonable price. So in those cases, a token payment is made to those doctors. That is called as honorarium. So these are the several types of payments which are required for the operation of the not-for-profit organization. So those are payments which are being made during the year. So all such payments will come on the payment side. Other than that, as we said, there might be a prize fund and money might be received for that fund. So when prize is distributed, then the amount which is spent comes on the payment side. We saw that there could be interest income or dividend income. So whatever is the investment made, if any investment is made during the year, There's an outflow. There's a amount going out. So investment would come. Whatever has been made during the year, purchased during the year, comes on the payment side. Sports equipment. So if it is a sports club, it might have to acquire sports equipment, which will go as an asset in the balance sheet. That also comes here. As I told you, there might be receipts for specific fund, match fund for conducting matches. If match has been conducted during that year, then those related expense comes on the payment side. If it is not a sports club but a charitable hospital, then it might be spending on medicines. Payment might be made for acquiring those medicines. Those payments come on the payment side. If some asset, it might be building, furniture, any sort of asset is acquired during the year by the not-for-profit organization, this outflow of cash or the bank balance is reduced. So there is a payment taking place. So that also appears on the payment side. And finally, the receipt and payment account closes with the closing balance of cash and cash in bank, and overdraft balance comes on the debit side. So these are the several items. On observation, we find the following things. To summarize, from this format, we can understand the following things. First thing, if you observe, we have the receipts and the payments. So whatever is the cash receipts and cash payments which have taken place for that particular year from 1st April to 31st March, that has been summarized here. We can find that it is all on recorded on the account head basis. So much is spent on salary, so much is spent on acquiring building, so much has been received under the head subscription. So it is basically a summary. So it is nothing but summarized cash book, you can say. Cash book is maintained date wise in chronological order on the basis of the date when it is received and paid, but here receipt and payment account is a summarized cash book, you can say, because the accounted wise what was received and paid appears in the receipt and payment account. Next point we observed was it opens with the opening balance of cash and bank balance and closes with the closing cash and bank balance. The third observation that we made was that here all the receipts and payments that are there, whether they are of revenue or capital nature, they are included. If the expenses point of view, you can see the routine expenditure of salary, rent, honorarium, whatever is paid, repairs, those are all revenue in nature, revenue expenditure. Whereas at the same time, you have the amount spent on building, investments made, sports equipment purchased, all those are of capital nature. Those are going to get capitalized and are going to be shown the balance sheet as an asset. But in the receipt and payment account, we don't make any difference. All those payments appear on the credit side or the payment side of our receipt and payment account. Similarly, the next observation that we made was that the receipts and payments which have been receipts received during the year and payments made during the year are being taken into consideration. So like in this case of subscription, we saw that total amount of subscription received during the year has been recorded on the debit or the receipt side of the receipt and payment. There is no distinction made. You can see that whatever is the amount related to previous year, current year, next year, all the three have been clubbed and shown as receipt. So there is no separation made that only related to current year would be taken. What has been received, and in case of payment side, whatever has been paid, whether it is related to current year, some insurance might be paid which is prepaid for the next year. Rent might be paid for next year in advance, but still it has been paid. So entire payment would come on the payment side. So it is the received and the paid that is getting recorded in the receipt and payment account. So moving further from all this, what do we understand? That when they're preparing receipt and payment account, the basis of accounting that we're following is cash basis of accounting. It is received and paid, not the expense incurred or the revenue generated or the revenue earned. It's not revenue earned or the expense incurred, but it is the amount received or paid. So it is cash basis of accounting which is being followed when receipt and payment account is being prepared. Now, what type of account is receipt and payment account? Receipt and payment account is a real account. You know that accounts can be classified into three categories. personal account, real account, nominal account. Real account, this receipt and payment account is a real account category. Also, you have found that is the received and a paid amount which is getting recorded. So you don't find any adjustments here relating to the outstanding expense or prepaid expense or depreciation, which is a non-cash expense for that matter. There are no adjustments found or made in the receipt and payment account. And as I told, it is summarized cash book, you can say, because transaction here written account wise, like salary, subscription, building. You are not taking it transaction wise. There might be several transactions or subscription received during the year from so many members, but we are accumulating together and putting it under account head subscription. So finally, we see that left hand side, which is a debit side, is a receipt side, like in your cash book, and the right hand side, which is a credit side, you have the payment side. So I hope with this explanation, the receipt and payment account is much clearer to you. Now moving further, let us understand the receipt and payment account much more further by solving a question. This is a CBSE 2020 examination question. Now look at this question. Let us understand. Please note down this question. We'll be solving this question in a couple of minutes. So, from following particulars of Glorious Club, prepare receipt and payments account for the year ended 31st March 2019. Opening balance of cash 16,000. Subscription including 13,000 for 2017-18, 93,000. So 93,000 includes 13,000 related to 2017-18. So which means rest 80,000 relates to 2018 and 19, that is the current year. Investments purchased, it's a payment 35,000. Maintenance expenses, it's a payment of 15,000. Locker rent, probably this is a club, it maintains locker facility where the members can come and keep their items. So it is collecting rent on that. So locker rent is an income of the NPO, that is of this Glorious Club. So this is a receipt. Life membership fee has been received from the members, 85,000 during the year. Insurance premium, the club has paid insurance premium. So this is a payment. Now with this, let us prepare the receipt and payment account. Prepare the format for that. With two sides, debit side, credit side, there is a receipt side and the payment side with amount columns. So let us start. First, it starts with the opening balance of cash of 16,000. So we write Glorious Club, receipts and payments account for the year ended 31st March 2019. Don't forget to write the debit and credit because it is an account. The debit side is the receipt side, so receipts, rupees, payments, rupees. So let us start now. We saw that it is starting with the opening balance of cash. So you have to balance brought down. That is 16,000. That is cash in hand, which is there. Next, subscriptions, including 13,000 for 2017-18. So out of total 93,000, 13,000 is related to the previous year. It is a receipt. So we write to subscriptions. So you can write related to 2017-18, 2018-19. So related to the previous it was 13,000 and current year it is 80,000, making up a total of 93,000. So this is how we are writing the details. Then next is investments purchased 35,000. So this is a payment item. So you write on the credit side buy investments 35,000. Maintenance expenses 15,000. So this is a payment. So write by maintenance expenses 15,000. Next, we have the locker rent which has been received by the club, which has been collected from the members, 40,000. So it is on the receipt side to locker rent. Amount is of 40,000. Thereafter, we go to the next item, life membership fee. Life membership fee has been received from the members of the club, 85,000. So it is a receipt. So write on the debit side to life membership fees. Amount of 85,000. Then finally we have insurance premium which has been paid by the club, 6,000. So you will have by insurance 6,000. Now that's it. We have put all these items, we have bifurcated it into the receipts and the payments here. Now we will close this account. We have to find which side total is more. So you total the debit side, it comes to 2,34,000. And if we total the credit side, we find it is much lesser. So we will write the total of the debit side 2,34,000 on the credit side. And now we shall find the difference. The difference here is 1,78,000. So this is the closing balance. So you will write by balance carried down 1,78,000. So this is how we prepare the receipt and payment account. And you see that you have written all the receipts on the receipt side and the payments on the credit side. It starts with the opening balance and closes with the closing balance, which is the balancing figure that we got, which is the closing balance. So this is the receipt and payment account which is prepared by an NPO. Hope that the concepts which have been discussed today in the session were clear. If you like the video, please do like and share it. And if you have not already subscribed, please do subscribe to the channel to get continued notification of the videos that I will be posting in the future. Thank you all for watching today. Have a great day.